Sold at 560.
785 the first, 785 the second, be sure, 785 the third and final time, sold. The third and final time at £910,000, sold. Welcome to the latest version of Allsop Prop Chat. This is where we chat about all things commercial property and hopefully enlighten you with a bit of new information and knowledge. My name is George Walker. I'm one of the partners who runs a commercial auction team at Allsop, which trades in typically under £5 million commercial income producing assets. Let me introduce Alex Butler, my partner.
Thank you, George. My name is Alex Butler. I head up the private client team here at Allsop, specialising in lot sizes between £2 and £10 million, and I've been doing this now at Allsop for 9 years.
And you learnt your trade in the auction room, Alex, didn't you?
I did. I started with you all those many years ago, learnt the tricks of the trade at auction, and I've always dealt with that kind of market. And in those days, obviously, the auction market was 200, 400, 300,000 pound lot sizes, but now those guys I knew 20 odd years ago are now doing 3s and 4s and £5 million lot sizes. So similar people, just different lot sizes.
Yeah. So we both work in the private investor market, people really investing money to generate some income, produce some wealth, and obviously preserve that wealth at the same time. So we're addressing the subject today, the sub £10 million market. It's alive and well. Why and how to access the buyers? So how alive and well is it, Alex? What have we done probably since the Truss Budget, which was a little landmark, wasn't it?
Alive, definitely. Well, there might be a bit of question mark over the well word, but it's alive. We've been pretty busy. We've done 41 transactions as a team since September last year, since Trussonomics, which is not a bad number of deals over that period of time.
And what sort of value is that?
So that's an average lot size of £4 or £5 million. We've turned over about 160, 170 million pounds on those transactions over that time frame. Mixture of sectors across the board, from retail, industrial, office, supermarkets are always popular, more like convenience stores is what I deal with.
It seems a bit odd, but actually, having had a surge of improvement in value in supermarkets during lockdown, they're backing off a bit, aren't they? They're worth a bit less than they were.
Yes, there's no doubt that the interest rate rises have had an effect on the yields achieved of supermarkets. I mean, they're still very popular, as they proved to being during COVID. But yes, there's been a shift in yield on that, but maybe not a full point, maybe half a point.
Yeah, so it won't have been hit quite as much as the industrial sector.
Definitely not. No.
It's just chipped off a bit.
They've been fairly robust, that sector.
And it's always the source of, the private family office loves the supermarkets.
Absolutely right. Nice, manageable lot size and
alternatives. What does alternatives mean? I mean, we typically think of retail, industrial offices, but alternatives is quite broad. What's
alternative is getting more popular as the market toughens. People want to park their money into secure, long-dated income. Alternatives is gymnasiums, hotels, children's nurseries, special needs schools. Clearly, gyms and hotels were untouchable or unsaleable during COVID.
Yeah, but you've now got Travelodge on the market.
Exactly right. I mean, Travelodge is a point in case whereby a business no one was touching, or covenant no one was touching 2 or 3 years ago, is now showing real value, 7-8%. And
real profits.
And real profits and staycations, trading their socks off. So the clever money seems to be chasing these Travelodge type covenants, and also pure gyms. Again, the gymnasiums are back in vogue because we've come out of COVID and everyone wants to get fit.
And it's very much part of people's diaries these
Absolutely
days.
Right.
So
Absolutely right.
Let's look at commercial auctions. We're a slightly smaller scale lot size, but since the September auction, and September was a big auction for us, £130 million sold in a day. The November onwards auction, we still sold over 500 lots, raising just over £300 million. It's not all tiddlers. 82 lots of that was over $1 million, which is about £150 million of the sales in those bigger lots. Our market's been dominated a little bit by the William Hills. We've done 125 lease backs directly for William Hill, who want to keep the leases on these buildings, interestingly, yet sell the freeholds to raise some money because they've just been taken over. If you thought they were closing, they're not. It's all a bit of a movement. Obviously, we're finishing the Boots portfolios, and we've been doing that for 4 or 5 years now. But like Alex, we trade across the sectors. Lucky enough to have some industrial sales, and industrials have been flying off the books, taking a bit of a blip. But now, once again, you offer someone a multi-let industrial estate and they're all over it. The office sector is something the private investor who's typically got mixed use, so they start in residential, they don't really get offices, but what they do get is a long lease. So whether it's a government letting, whether it's sold some let to Virgin, nice long secure income, it really ticks the box. And like Alex, the other sector's quite big, leisure, pubs have long leases, big car parks, gyms, and a bit of hotel action, and nurseries, of course, as well. So we're quite broad, and the sort of the tension's gone out of the market a bit. We've got another auction coming up, and it will, I'm sure, be clear that the market is still there. Who are the buyers then, Alex, do you think, predominantly?
It's very simple. I did some analysis for the purpose of this conversation. We've done a few funds, a few councils still around, but the big player in our £2 to £10 million market, with 40% of the sales we've done over the last 9 months, is the private investor. We've always focused on them as a business. They've always been a lifeline, and there's no doubt that the private investor is still as aggressive now as they were last year. They're cash rich, and they're keen to engage in the commercial property market. And 40% of our buyers are private people or family trusts who are very, very keen to diversify into commercial real estate.
And without wishing to bang on and talk about our experience, I mean, we've all played in this market for some time, over 25 years. That private investor is quite a funny animal to work with sometimes. It's quite unpredictable, but they actually deliver, don't they? They do. I mean,
part of our job is to try and sort out the wheat from the chaff and who the good buyers are and who the bad ones are. But more often than not, you question the integrity of a phone call you receive from a Mr. or Mrs. And actually, when you ask them to prove the funds, they send through a bank statement from Lloyds Bank with £5 million in cash sitting in it, having just sold their business or regurgitating profits from another property portfolio. So it never ceases to amaze us how much money is out there. And as we've always said, George, you taught me many, many years ago, you never judge the book by the cover, and everyone deserves a chance. And the number of times a client rings me saying, God, where did you find that bloke? And how did you put up with him? But we normally get proved right that you've got to persevere with people.
Yeah. And of course, for me, we still have a very digitalised auction process, but it's very clear there is a clear deadline by which these people have to bid. And quite frankly, some of the people who are a little tricky, quite hard to pin down, it works very well for them because they know they've got a deadline and they just deliver and get themselves registered. When we talk about cash, obviously we don't take wheelbarrow loads of cash anymore. It's all very regulated and highly checked. We predominantly sell in the small lot size to private investor and the family propco, but some tenants have popped up along the way. And Alex, you had to go with some councils. They're still buying probably within their territory.
They do, yes. They're normally, the three we've done over the last 9 months have all been councils buying within their patch, a shopping centre or a disused House of Fraser. So it does seem to me that they're buying for the right reasons rather than going out paying a silly yield for Outer Hebrides. So I think they've learnt their lesson. They've got to stick on patch.
And actually it makes sense to have these town centres in the right ownership. Skills.
It's regeneration, getting things back on their feet, and they are the right kind of buyer as long as they carry on and follow through the business model.
And we've always been quite good at attracting overseas money. Is that present much in what you've done?
Less so than it has been. Definitely tailed off. I think we're down to about 15-20% of our buyers are overseas, whereas last year I imagine we were probably near 40%. I think people are just nervous about the UK economy, and they'd like to see things settle down a little bit before that. Plus, there's a bit of political uncertainty next year, isn't there? So I think we probably won't see a rush of the overseas guys probably until 2024, 25, I would think. But
and on our side of the fence, in the auction room, we used to do 10% of our sales regulated to overseas, but they've been away really since this bump in interest rates in September, October. But actually, the last auction came back quite vigorously and spent £600 million on London assets and some regional ones. So it was quite interesting. They do come and go, but when they want to buy, they're all over it, which is great. So why do you think, Alex, simply, we mentioned income generation, is that the only reason people buy?
No. I think the biggest driver at the moment in my market is the fact that there are some opportunities out there. Yields, no doubt, there's no denying it. Yields have moved out as rates have got higher. The fact that we've got cash-rich buyers makes a big difference because they're not seeking bank funding, so therefore they can be a little bit more aggressive than the debt-driven buyers. And there's there's a bit of value around. I think people can see that.
So they're buying, clearly there's an income coupon on what we sell, which is between 6 and 8% typically. But they also want to be able to see it next month and 6 months later and 5 years later. They can see what they bought.
Absolutely right. I think if you can buy now in cash, and you may pay possibly a little bit more than you wanted to, but I think it's true to say, I think you agree with me, that things will settle down. Rates will peak, inflation will turn round and hopefully come back down towards where it should be. And I think if you can get through the tribulations of buying now, it may prove quite a timely buy. We're seeing value. We mentioned Travelodge earlier. As the supermarkets, Morrison supermarkets are not quite in vogue anymore, as Lidl's and Aldi's have driven on ahead, and Tesco. So there's certainly some value out there. Covenants, who were probably not as strong as they once were a few years ago, but I think we're seeing buyers who think, if I can buy now at 6.5, 7, there's no reason why in 3 years' time that won't be 5.5, 6.
I think you're right, and you must remember the simple maths. If it goes from 5% base rate to 4, that's a 20% drop in the cost of finance, and that pretty much in our market pretty much goes to the bottom line, isn't it?
It does.
And everyone is saying that next year, but they've been saying 6 months' time for about 12 months.
Interest rates are such a big driving force.
If it comes down, it releases a bit of value.
It does.
It doesn't overnight. It's not that.
And
easy.
the banks will come back eventually, won't they? They've got plenty of money, the banks, so hopefully they'll start lending it again a bit more aggressively.
And buyers like to find something that's in our market, something quite hard to understand, whether there might be a development opportunity upstairs. They paid probably a bit too much for that. Special purchases we're digging out with the auction contract, and interesting to see some tenants recently, Busy Bees nurseries. There are a couple of assets out in the market which the rents were very high on, and yet Busy Bees competitively bought and paid about £3 million for two assets in that last auction. Alex, looking forward, we've got, it's uncertain times, but there's bright spots.
Very much so. Very, very much so. We've seen the industrial and warehousing market bounce back very, very aggressively since the end of last year. And we're achieving yields on industrial the same as we were achieving a year ago. So they seem to be untouched. They're back in vogue again. And a huge rate of money going for that. I mean, you do more high street retail than I do, but that seems to be.
I think the key to high street retail is it's always the private investor it's a right lot size and they can walk past it and understand it. But I think it's had a very difficult 10 years. The rates were revalued in April this year, and what that means is the tenant has to pay local authority tax. And in some of the towns we work in, that local authority tax has gone down by about 50%, even more, which means the occupational cost for the tenant, you've got a coster paying £65,000, £70,000. Suddenly the rates bill's gone from 40 to 25. And suddenly the landlord thinks, well, there's a chance to get some rental growth out of this because the tenant's having a bit of a better time. And I think that's coming through. I don't think it's across the board, but certainly I can't see high street rents falling any lower, and then people are talking about upticks. And we sold a turnover rental too recently where private investors have really gone for it and paid quite strong prices because they believe in that turnover is going to go up. And of course, the other aspects have been online sales. And interesting to look at the results last month. Online sales dropped 3%, which is only putting cash into
I think the high street certainly feels busier. People like to go and shop in person rather than online if they can help it. But George, there's no getting away. The market it's not going to be easy for the next few months, but I do think there's some life in it. I think that's the whole point.
We've always worked with long-term buyers too.
We have, and when rates do peak and when inflation does come down again, I can see and feel a huge weight of money looking to come in.
And you're guaranteeing profits, Alex, for people who buy now, aren't you?
Yes, not guaranteeing it.
But if you buy when it's a slightly difficult market, if it gets easier,
I think
margin.
The clever money is buying now because they feel it's an opportunity. And we're seeing that day in, day out. Going forward, it's not all doom and gloom. I think the market will bounce back very quickly. And when it does, hopefully we'll be well placed to take advantage.
Brilliant. Well, look, thank you everybody for your time. I hope you found that useful. Alex and I have got a lot more to talk about, but we won't go into too much detail now. Just give us a call at allsop.co.uk. My name is George Walker from the commercial auction team. That's goodbye from me and
goodbye from Alex Butler in the private client team.
Thank you very much.